If I could start over, here's exactly how I would start investing in properties and avoid the death zone. And to make it even more interesting, let's say I'm starting over with no money and zero experience. So we're right here at the bottom of the mountain to start. And we want to go all the way to the top where there's enough cash flow from properties to be able to leave a job and become financially free. Now, most people think that you need to be rich to buy real estate, but they don't think about all of the ways that they can get some firsthand exposure, get their foot in the door with little to no money. By the end of the video, I'm going to explain exactly how I've gotten started into real estate and how I've grown a $10 million portfolio and how you can do the exact same thing to reach the top of the mountain. So I'm going to break this down into a format where you can easily understand it. You've probably never seen this anywhere else. If you have no time under your skill, here's exactly what to do. So focus on learning, not earning. This is going to allow you to climb higher up. There's so many ways that you can work for someone else in this industry and learn from the inside and actually get how the business works. I actually personally started at the very bottom with management. Management can mean a lot of things to a lot of different people. Most just think of property management, but there's a bunch of different categories. There's 4 of them. Acquisition management, finding and analyzing deals and serving those deals to an investor on a silver platter. Renovation management, where you find contractors and manage those contractors on a job site for an investor. And then obviously property management, or you re-rent units, do showings, deal with unit repairs and tenant communication. And then financial management, my least favorite, where you're doing receipts, you're doing bookkeeping, potentially even paying people. So in any of these cases, you're really just managing for an investor, but you're not really gaining any equity or cash flow. So that's kind of the downside, is you're not really earning anything from the property's performance. You're really just earning fees based on some service that you're providing. Now, you could work for free. Like I've actually heard of some people at the very beginning, just willing to work for free to get inside of a business with a big time investor. And that's a great idea too. Now, another great way to learn the ropes of the industry and make some serious money while you're at it is becoming a real estate professional, whether part-time or full-time. I'm surprised by the number of people that don't become a realtor, mortgage broker, or a property appraiser to be able to learn the ropes of the industry and do it while getting paid. Yes, it takes some time to get a license, but you can learn a ton, and more importantly, give yourself some credibility early on. But again, still not buying properties here, just acting as the middleman between buyer and seller. Now we're officially moving up into the real estate investor category. This strategy is called wholesaling. And this is where you're going to be finding properties that are good enough for you to make a profit and for the end investor that's buying it to also make a profit. You're essentially flipping the purchase agreement for a fee. The benefit is you don't really need any money up front. It's pretty low risk, but the catch is it takes a lot of time. Finding properties with enough meat on the bone for both parties to make a profit is actually quite hard. And I think the internet makes it seem way easier than it actually is. I've heard of investors spending months knocking on houses, sending out flyers, and even coming up empty-handed. However, if you can master the art of finding great investment opportunities, your climb up the mountain just became a heck of a lot easier. Finding properties and making deals happen is what we teach our clients at rentalconsulting.com. So if you're interested, hit us up, because once you can find great investment opportunities, then you can continue climbing the mountain even further. So now that you understand how to make deals, the next natural progression of skill leads you into flipping. This is where you buy a distressed property that needs work, and the goal is that you fix it up and you sell it for a higher price. Speaking from experience though, HGTV glamorizes this and makes it seem way simpler than it actually is. You're going to be finding deals and then finding and managing contractors to do the renovation, calculating renovation budgets, timelines, and dealing with a whole bunch of unforeseen variables. Also, financing the property starts now when you're actually buying it and flipping. So you're going to understand a little bit more though about like qualifications and mortgage capability. Flipping is likely going to be the biggest step up the mountain so far. However, it's the first one where you actually now own a property, so congrats. Now, before taking the next step up the mountain, you got to reassess resources of skill, time, and money. The path isn't always linear here either. It isn't just management to wholesaling to flipping and then the next. It can be kind of jumping back and forth. For me, it was a couple of years of those 3 to be able to save up $50,000 and really be able to gain enough skill that I had the confidence to take the leap of faith past the death zone. Remember, we want to reach the top, which is financial freedom. And that can mean different things to different people. I consider financial freedom to be the point where the monthly cash flow replaces your active income, so you don't have to work anymore. Now, You can work because you want to, of course, not because you have to. And of course, you can go even further past that into building legacy, generational wealth, and whatever suits your fancy. So when people come to us at rentalconsulting.com and say, I want to create generational wealth, they're usually not going to do that through wholesaling, flipping, or property management, of course. To get to true freedom and wealth through the vehicle of real estate, you need to own properties. That's what brings us into buy and hold. There are a lot of opinions as to when one should start the buy and hold strategy. Here's my opinion. You're ready when you have tens of thousands saved and you don't need that money to live on. And you're prepared to lock it up for the next 5 years or more. Ideally, you'd have completed a couple deals on the active income strategy side to gain some industry skill. Though I've seen many bypass all of the active income strategies and move right into wealth creation, the buy and hold phase part of the mountain. That said, don't over leverage yourself and get up to your eyes in debt. Again, speaking from experience here, by the age of 27, I had actually over $5 million in real estate debt for my 8-figure portfolio. With little cash savings and a lot of liability, there were just too many sleepless nights. So this is why I call this phase of the mountain also the death zone, just like on Everest. There's this point on Mount Everest where if the climbers aren't prepared enough for the low oxygen levels, likely because they've underestimated the conditions or they've overestimated their abilities, they can easily die. Now, it's the same thing in real estate, except for the death part. The death zone is really where people have too much debt and they jump into deals without a solid foundation of knowledge. So if you're not prepared in the right fashion of, having enough knowledge and time, money, resources, this can be draining emotionally and financially. So yes, strategies do exist where you can go well beyond your own mortgage capability and your own liquidity. For me, that meant reevaluating my portfolio around 10 million, selling off the least favorable properties to be able to recoup some of that cash and ultimately have like some reserves set aside. 3% of my portfolio's worth is now always the goal before going to a higher altitude where the oxygen levels are thinner, right? With buy and hold, you're playing the long-term game and you shouldn't expect to make cash today, this week, or even this month. So it's kind of like planting seeds and watering those seeds for years to come. Because wealth in real estate is created when the market compounds year after year after year, mortgage gets paid down over time, so you own a lot of equity in the asset. So if you're trying to time the market perfectly and aren't prepared to weather storms, it can be game over. Here's an example. Back in 2007, people were rushing into the market to buy houses because of favorable mortgage conditions. Then 08 hit, the market crashed, people were losing everything. But here's the crazy part. If you bought at the peak of the bubble in 2007 and held onto your properties for 11 years, you'd still be fine. You'd be able to weather the storm and come out on top. But on the flip side, if you didn't have enough cash to cover your bills during those years, you'd be forced to sell at the worst possible time. That's how people lost. It's not because the market is bad, it's because they're just not ready for the inevitable storm that always comes. This is why I say buy and hold isn't about owning property as much as it is about holding on to them and being able to hold on to them long enough to win. The obvious next question is, well, which property do you buy? I'm going to break that down in the next video where we're going to compare the risk and the reward of each property type as you're climbing up that buy and hold section of the mountain. So if you're at that stage where you're comfortable doing buy and hold, then you're going to want to know, well, which property type do I buy and which one do I buy and which makes sense for me? So subscribe to the channel, stay tuned for that video.